In this video, we're going to talk about Nndm. If you're considering buying Nndm shares in your portfolio, then please keep watching this video until the end, because it'll cover many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $8.03 and closed at $8.65. The lowest point at which it fell to was $8.02, and the highest point it rose to was $8.77. Compared to the current price action, its 52-week low was $1.31, and the 52-week high was $17.89. The current trading volume of Nndm is 29.8 million shares compared to the average of 17 million shares. The current trading volume of an Nndm actually suggests that the stock is on a very, very bullish run, because despite the fact that the trading volume should be lighter in summer, and it is the case for many other stocks, the daily trading volume managed to double the usual trading volume. That means that the upward momentum of the stock is very pronounced and that it's not going to stop anytime soon. Let's take a look at the difference between the company's market cap and the enterprise value. Basically, the market cap is the sum of the price of all shares that are being currently traded, and the enterprise value is the value of the company's assets once all the debts are paid off. We can see that market cap of the company is $2.2 billion, and the enterprise value is just $110.7 million. This huge difference in what the company is worth right now and how much the shares are valuing the company at means that there is a very high degree of speculation in the company's equity, because the tangible assets are worth much lower than the value of the market. To put it simply, the company's perceived value is mostly in its capacity to grow in the future and in its capacity to revolutionize the manufacturing process. They do seem to have a certain advance on competitors, but it's still very early to actually appreciate this in real terms. For the moment, they mostly exist in our head. Now, let's talk about the number of shares the company currently has and the shareholder composition as of the latest data available. The total number of shares outstanding is 256.5 million shares. Amongst the total float, insiders hold 0.01% of them. We should also look at the percentage of shares owned by institutional investors. In that case, the institutional shareholders hold 19.3% of the total amount outstanding. There are 29.8 million shares that are being shorted, which represent 11.63% of the shares traded. Regarding the ownership of Nndm, my initial feeling is that the company's insiders are not very active at owning the company they are managing. But then again, we have to remember that Nndm is one of those stocks that survived during many years on a very dry period of time on diluting shareholders. And it's unreasonable to assume that those who made that decision also happen to have the resources to absorb so much dilution. So in that way, it's fairly encouraging to see that despite the dilution, institutional investors were still willing to swallow almost 20% of the total number of shares outstanding, because they're willing to believe in the stock and its potential in the future. The overall price action tendency of Nndm is upward. There's no doubt about it. With that being said though, I also feel like the time is right to increase our holding in Nndm in order to prepare for the upcoming weeks and months based on the recent performance the stock pulled off and the volume the company seems to have. The last element to consider would be the overall market sentiment in the financial market. The current reality is that investors and money managers are not willing to blindly follow companies like they did in 2020. There are many reasons why investors are now shying away from innovative and disruptive stocks. Some will say that they were overpriced, that they were overbought, or that they were relying too much on selling dreams instead of having solid financials. But the real answer is simpler. At one point, people holding those shares began to lock in their profits, thus creating a significant crash in the company's prices. Not really because they're all bad, but they just had more sellers than buyers. This triggered a torrent of sell-off from February of this year onwards. The overall tendency at the moment is that those stocks have bottomed out, but investors are generally speaking more skeptical, and only the companies that have robust financials or ideas may survive in the long term. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.